Hi, welcome to INR Bond Search for Yields. I am Nikhil, and in today's topic, we'll be discussing about the bond investors who invested in the state guaranteed energy bonds, where they're seeing drawdowns in their investments due to the sharp rise in their bond yields. So, why the bond yields of these issuers are rising is because the India is going through a power crisis. This is the twice in last 1 year in we have seen the power crisis in the last October 2021, and where the supply of the coal was lower and the demand was slightly lower. The power demand in that October 2021 was lower due to it was winter season, but now we are at the peaks of summer, and many states are also seeing close to 50 degrees Celsius, which is causing huge demand for power. But the supply of the lower supply of the coal is causing power shortages and the power cuts across in many of the states in India. Unlike other developed countries like Europe or US or Japan, where they use the lower thermal and more of a gas and nuclear and hydropower to generate electricity. But in India, we are 50% highly dependent on the thermal power, which is coal generated electricity. So hence, any shortage or disruptions in the supply of the coal causes a shortage in the power supply. And let's go through what are the how is it having a ripple effects and the state electricity boards, and also the power subsidies causing a burden in the state's financials. Currently, almost 12 states in India are going through power crisis, mainly Maharashtra, Gujarat, Andhra, Haryana, etc. And few states have also announced power cuts almost 3 to 4 hours per day, and few states also said they'll be cutting down 50% of power supply to the corporates and all other manufacturing units due to the lower shortage of lower shortage of the coal. The amount of the coal that has to be stored at the thermal power plants is so low that the amount of coal can be the current amount of the coal will be generated only power for 8 more days only, but which is almost 70% lower than the standard storage levels. And the current demand for the power is almost at 4 decades high. And the state electricity boards are having issues in passing on the sharp rise in coal prices in the form of rise in power rates to the end users. And due to the power subsidy given by the states are taking the financial burden, and also they have recently announced a sharp rise in the borrowings for the first half of the financial year. The borrowings were almost 50% higher than the previous year, and they're borrowing close to 1.9 trillion in the first half. And which, as a result, the SGL movements, the yield movements the yield movements rose, and the cutoff for the 12-year SDL in the auction was around close to 7.2%. And if you see the UP Power 2032 bond, it is traded at 40 bips higher than the previous month, and this is mainly because of the financial burden on the state electricity boards. And however, the central government have issued the Uday bonds. The Uday bonds are called Usual Discom Assurance Yojana bonds. These bonds are issued in order to save the Discom from the debt levels, and also where the states can raise fresh money, and also this money is not added to the state's fiscal deficit. And under this scheme, where the states will take over around 75% of the Discom debt, and they will also be issuing the non-SLR SDL bonds, and the debt from this Discom assets will be taken over, and all the proceeds from this bond money which is raised will be given to the Discoms in the form of loans or grants or the equities. And the rates on these bonds is set at GSEC plus a 0.5% spread. The first Uday bond was issued in 2016, and number of the bonds issued as of now, the value of the bonds issued as of now is at 2.32 trillion, and the bonds yet to be issued, the value is at 2.69 trillion. This clearly shows the amount of burden on the states. And the benefits of issuing a Uday bond is that states will get a will get a coal, and also the price of the coal they can buy, and the price of the coal will be transparent, and also they'll get access to the other coal supplies, and as well as they can buy the power from the secondary market. Hence, the states have issued the Uday bonds. And currently, if you see states like Punjab, Andhra Pradesh, and few of them own around thousands of crores. Andhra Pradesh government owns around 25,000 crores to the AP Electricity Board, and same as the Punjab government owns around 16,000 crores. Hence, this mounting amount of money is causing a huge stress on the state's financials and also the electricity boards. So we have the Uday bonds, the traded average traded yield is around 7.46%. And the UP Power, as I discussed before, the UP Power bonds currently are trading almost 40 bips, 40 to 50 bips higher than the previous levels. To know more about the traded yields and also to check out other corporate bonds, do download our INR Bonds QuickInvest app, which is available on both the App Store and Play Store. You can set your maturity and as well as the rate of return which you want to invest. And our curated list of bonds will help you to beat inflation, and also to in order to, even if you want to recover the loss to the inflation in the previous years, we have the bonds which can help you to recover the previous year loss and also beat the current year inflation levels. Thank you for listening in. If you find our YouTube videos useful, do give us a like and subscribe to our channel. Thank you.